Thanks so much for joining us today here on America's Retirement Headquarters, home of the Retirement Guys formula and America's Medicare Associates with Nolan Baker and Scott Kirshner. And myself, my name is Chris Vaughn. Really do appreciate you spending part of the day with us today. Here's how you reach out, 419-794-3030. That's the phone number, 419-794-3030. You can always find them online, Americasretirementheadquarters.com. On today's show, can an annuity help you recession-proof your retirement? Another Big Tennis star retires. Find out how he plans to spend his new free time, and what kind of customer service do you expect from the manager of your financial plan? All this and more. But first, I got to check in with the guys. Scott is not with us this week, but I do have, I guess, the fabulous Baker boys. No relation, though. Jeremy Baker and Nolan Baker. So, guys, glad to be with you. How are you today?
Doing good. Yeah, we do have the Baker boys in today. So we got, some great information. We actually just finished up our economic summit that we had. It's our semi-annual review where we give kind of our outlook on the markets. Super exciting because Jeremy and I are both big hockey guys. My youngest son is still in travel, getting ready for high school hockey season when it starts back up. But we had two of the players from the Toledo Walleyes come and join us, and we were talking about, does the best offense or defense win games? And, today during the show, we're going to be talking quite a bit about what should you do during a market crash. And, the question of offense, defense, it can make a big difference in really how do you respond right now, and, can you stay in the game to win? So if you're a Walleyes fan, if you missed that interview, we do have our interview up on our YouTube channel. If you buzz over to, again, America's Retirement Headquarters on YouTube, you can see the interview that we did just recently with Brandon Hawkins, get his feedback and get a little bit more talk about how we're doing. But Jeremy, I know you're also hosting some families, and you're doing the Toledo Cherokee, which is, of course, home to me. That's where my son's playing AA travel right now. How's things going?
Really well. In fact, I have a goalie living with me, so he might argue that goaltending wins championships, not offense or defense, but I guess that'd be sort of the defensive end as well. But they started their season. They kicked it off actually 2 weeks ago. They had a home opener at the Ice House there in Toledo, and they had their first road games this weekend. So they went 1-1, so they're 2-1 overall on the season. And other than trying to keep my fridge full with 3 teenagers now, that's a bit of a challenge, but everything's going great.
I'm looking forward to, I'm actually kind of dreading the teenage days. My son's only 6, and he eats more than I do most nights, but I can only imagine with 3 teenagers. Bless you guys. I'm going to play the devil's advocate here and say it's not really offense or defense. You really want a good combination there, and not too right. That's my very diplomatic Switzerland approach. But let's talk about this here. I don't know if you guys had a chance to see the incredible video of NASA's DART spacecraft deliberately crashing into an asteroid.
Looks to me like we're headed straight in. Oh my gosh. Oh wow. We got it?
And we have impact eternally for humanity in the name of planetary defense.
The whole plan is they're hoping to develop a way to ward off an asteroid in the future if it threatens to strike Earth. A little bit of life imitating art. I couldn't help but compare this to a retirement plan experiencing the stock market crash. What kind of measures do you guys take to lessen the impact of those?
Well, I mean, it really does get scary when you have markets like there right now, and what you should do during a crash. It can make a big difference whether you're somebody that's close to or in retirement time versus somebody who's quite a bit younger and maybe starting to save and invest. And really for those people that are starting to save and invest early on in their career, I tell my kids, they both have a 401k, and I tell them, don't worry about it. Just continue. What you're doing is you're acquiring shares, and then, if the market's down, it may not feel good on your statements, but you continue to acquire more and more shares. So as you get older in life and those shares come back in price, like the markets have shown that they do over time, you'll have more shares, and that'll help with the recovery. Now, when you get closer to retirement time, you really don't have the luxury to make up for mistakes, and that's why, over the years, we've trademarked this system called the independent income system. So let me give you a couple of different things that you should be doing right now with the market crash. There's absolutely different threats that you need to be careful about, as well as there's opportunities. So, in the short term, the threat is this market downturn over? And, that's the $1 million question, and I'm sure everybody's willing to give you their advice. But at the end of the day, the market doesn't really care what somebody's opinion is. The market's going to do what the market's going to do. So short term, what we see as risk is continued elevated. So if we look at things on a technical basis, technically short term, the market is still a bit dangerous and risky. And so for those folks that are close to or in retirement time and are pulling money off of their investment accounts, by selling money in a declining market, you could be accelerating the risk of outliving your money. You may want to consider how you're looking at, taking distributions. Jeremy, at the same time, we have kind of a double whammy effect. Usually you think if you're in stocks, you put your bonds in there and they'll help offset each other. But what we've seen this year happen is that traditional 60-40 asset allocation approach has had some of the worst years ever, because not only are stocks down, bonds are down now too because of interest rate risk. So wouldn't you agree that, like, in the bond market with rising interest rates, that's another big threat that we've seen for a lot of the people that are in retirement time?
Absolutely. It looks like almost like one of those situations where there's, quote unquote, no place to hide. There's no place to put safe money other than cash, which then you're running the risk of inflationary pressures, which obviously are quite large right now. But yeah, you're right on the 60-40 mix. And then the other thing, you talked about dollar cost averaging in, and when you look at people taking distributions, you kind of want a dollar cost average out. But of course, it's a little bit more difficult when you're trying to sell things that are at a low, whether it be bonds or stocks.
Yeah, you definitely don't want to be selling in a declining market. So, the philosophy, if you haven't seen it, just Google independent income system. You can kind of watch that video. Now, Jeremy, you brought up another threat that I think a lot of retirees, didn't have to think much about until this year, which is the threat of inflation. So when they're looking at building out plans, a lot of times people will use this golden rule of thumb, like I can take a 4% withdrawal rate, but what they forget to factor into it oftentimes is the impact that inflation will have. And so unless you're looking to buy like electronics or TVs, the cost of living has dramatically gone up. You think about people that are in retirement time, you've got healthcare costs going up. You've got food, energy, the prices are having a big impact. So when you're looking at your plan, don't forget about the threat of having things inside of there that can help you fight off inflation. There are certain types of investment vehicles that can provide inflation-adjusted type income. Social Security is one example. There's also things like annuities. That's another example. When you're looking at your money for the long term and you're looking at money in the market, one of the things that we typically talk about is what type of methodology that you have. So there is a methodology of long-term investing. You can be more successful with a growth-oriented type strategy in the stock market. At the same time, within the stock market, you may want to incorporate what we would refer to as circuit breakers. So in a couple of our strategies that we have, what we have is we have circuit breakers, and that means when the markets technically turn negative, what we do is we look to reduce the risk overall and go more defensive in reducing equities. It's kind of like driving a car, So if you're driving a car and you're in a target date fund or you're in an investment strategy, throughout any given quarter or any given year, it's like you're setting your miles per hour at, whatever that speed limit is. Let's just say it's 70 miles an hour. And going 70 miles an hour, it may be fine as long as it's sunny outside and you're on the turnpike or 475. But, as when you get in subdivisions or you get off the main expressway, going 70 miles an hour is not always the best way to do it. So using circuit breakers is a way to kind of slow things down. And so as risk gets elevated, maybe you bring your risk level down to maybe like a 35. Something that has also become very popular over the last couple of years, Jeremy, is what is called protected equities. Protected equities are a strategy within the market that allow you to participate up into a certain capped opportunity on an underlying investment, yet can provide 15 to 25% downside risk. So if you want to be in a situation like when we were talking with the players from the Walleyes, what they talked about is you never give up, right? Mm-hmm. You lose when you give up. You have to stay in the game. So if you're looking to stay in the game, but you're worried about maybe this downturn in the market could get worse, and it absolutely could, then the strategy of protected equities could make a lot of sense for you because, again, what it does is it allows you to participate if and when the market comes back over a set time frame, but then allows you to offset or reduce or eliminate the losses when the downturn in the market happens. The last thing I'd say, and then I'd chime back in and ask your opinion, Jeremy, is when you're looking at things for the long term, I think this is one of the greatest buying opportunities out there that we've seen. Of course, we saw the flash crash that happened back in the early 2000s, but it could be another great opportunity for long-term investors to get some substantial discounts. And again, if you think about the concept of investing, you buy low, you sell high. This market's creating a lot of opportunities. What do you think, Jeremy?
I think that's true. Some of the things we look at, and we covered a lot of different topics, when we look at our independent income system, what that does is compartmentalizes your money into, immediate needs, money that you need for immediate the next year. It also looks at using 1 to 3 years, 3 to 5, and then, that kind of 5 to 10 bucket that you mentioned is for long-term growth to take advantage of these opportunities like this. There's a lot of millionaires that get made in markets like this because of the buying opportunities. The other thing I would like to reiterate is that 75 miles an hour, you think, why wouldn't I want to go 75? And I know I'm sort of new to Ohio and driving down some of these side streets, and once in a while you'll see these speed bumps that just come along. And it's like you almost have to do 20 to 15 miles an hour, otherwise you're going to bottom out or, do the old Dukes of Hazzard where your car is going to be flying through the air. So, from an investor standpoint, you do want to have that ability to adjust your risk and take advantage of the circuit breakers and tone it down because, when you're if you think about going 75 miles an hour, if something happens, there could be a fatality, and we don't want to have that definitely in our investment products. The protected equities, great strategy. It has a bit of a buffer, and then there's that, depending on the strategy you use, you can definitely participate in the upswings, which eventually will come back. I mean, the day will come when the market comes back. We'll look back at this kind of period of time and think about, we've been here before. The market's back to where it should be. People are seeing double-digit returns, and then it'll look like this is just another something that we've gone through before.
As they say, history doesn't repeat itself, or those who don't learn from history are doomed to repeat themselves, but it doesn't necessarily repeat itself. It certainly does rhyme. We've seen market fluctuations before, but we were all younger. If they're saying older and wiser is the case than younger, and I don't want to say, dumber, but we at least had longer time on our side before we needed to retire. But at the same time, as you enter into retirement, there is still money in that 20, 30-year retirement that you're not going to be touching for 10, 15, 20 years. You can still think of your investments in the long term in those regards, but you don't want all of your money tied to the market. You don't want all of your money out of the market. It's finding that right blend, having that combination of offense and defense when it comes to your retirement. Go ahead and go online, take a look at the independent income system. Just Google it. It'll pop right up as the first result there. And then go ahead and schedule a time to speak with America's Retirement Headquarters, figure out the right strategy that's going to work for you. And, of course, it's going to vary from person to person. There's no cookie-cutter approach when you come into the office at America's Retirement Headquarters. Give a call, 419-794-3030. Find out how to put together a plan for you that's going to get you through whatever may come down the line over the 20, 30 years in your retirement. 419-794-3030. You can also schedule a time online, americasretirementheadquarters.com.